Hey there, everyone. It's Joe from Ainsley's Gold Silver Standard Insights, brought to you by goldsilverstandard.com and ainsleyBullion.com.au. Today's topic is fallout from the FTX saga may be only just beginning. Now, that's posted on the Ainsley website. I'll put a link below for you to follow along. Of course, we have Chris Tipper here to break down the morning's news. And joining Chris today is regular contributor and Ainsley team member, Branko Radunovic. So, gentlemen, over to you.
Thanks, Joe. There's the famous quote often credited to Warren Buffett that only when the tide goes out do you discover who's been swimming naked. And it's certainly approaching low tide for both traditional finance and crypto firms who are lending to or otherwise associated with FTX. Josh talked us through the devastating collapse on Monday, and today Branko joins us to look at the situation unfolding currently with the second wave of collapses as we discover more of those naked swimmers with the contagion spreading. So welcome back, Branko.
Thanks for having me on.
So let's dig straight into this again. I know you've been looking at it in quite a bit of depth. So can you give us a bit more background? Like I said, Josh sort of did give us that overview, and you can go back and watch that in the previous Insights video. Mm-hmm. But what are these latest updates? Because there's a lot that's been happening just this week.
Yeah, so I think just trying to think about, so Josh would have been talking about it on Monday. So since then, what we've seen is basically SBF's been very busy on Twitter, tweeting away, which is very interesting to see someone who is, probably committed multiple crimes, just, be very active on social media. It's quite odd. And then the biggest story would be the fallout we've had of other firms, namely Genesis Trading has halted withdrawals. Mm-hmm. And we've got the third biggest exchange in Australia, Digital Surge, has also done the same, a lot closer to home. They've halted withdrawals. And then BlockFi has declared bankruptcy. And there's been many more rumors and likely many more to come. So I think we're really starting to see the effects that it's having on interconnected companies. That's probably the biggest development. There are other small developments around, like, it got found out that, he was in the Bahamas and he's selling his $40 million mansion and all this stuff, but that's, lower on importance. But yeah, the big developments are we're starting to see the bank run and contagion effects on other firms.
So that's, I know I've been trying to watch that, and it's actually really difficult. And I just want to sort of digress a little bit on Twitter. Twitter has absolutely helped us in this scenario because that's where we're getting a lot of this information directly from the sources. But there's also a lot of FUD, or as they refer to in crypto, which for those who don't understand what that means, fear, uncertainty, and doubt. There's a lot of FUD and false information that seems to be coming out as well, or speculation and rumor. So it actually becomes quite difficult to know what's real and what's not in this scenario, doesn't it?
Yeah, well, I think on that, Crypto.com, one of the largest exchanges behind FTX, there was a lot of rumors about them, and they came out and kind of cleared that up. And that was one example of where the rumors were unwarranted. But then there are many others where it is warranted. So right now, it's a very difficult time to try and decipher what is true and kind of what is false around this. I think one good, easy rule is if a company says they had some exposure to FTX, I think that's a warning sign if they had a large exposure, because often they will deny it. So in the event they actually have to admit it, it probably means it's quite bad.
And I suppose what you said before about some of those exchanges and other players having to halt withdrawals, that's not a good sign either, is it? When there's actually taking some sort of concrete action.
Yeah.
But the danger with that is it's too late for a lot of people, isn't it, if they've already halted?
I think that, to me, by that point, it's too late. If we're trying to catch it before it reaches to that point, by the time they've halted withdrawals, they're probably going bust, as we'll probably see with Genesis and Digital Surge here in Australia.
Right. So there's been a lot of comparisons made between the Lehman Brothers collapse that really was the start of the or greatly contributed to the financial crisis, and what's going on here is the crypto equivalent. So can you maybe talk us through a little bit of some of those parallels about because this is quite significant, and people might be going, oh, well, they're still talking about FTX, but you need to understand just how major this is for the crypto industry, and that there are spillover impacts and effects for traditional finance as well. So can you give us some of those parallels between what happened in the Lehman Brothers situation and what's happening here?
Yeah, absolutely. I think there are massive parallels, and I think that, you're a bit of a fool if you don't think this will impact the traditional finance space. There are a lot of major players there that were invested in FTX. You got many players that were involved. Obviously, in the crypto space, it's going to have a bigger effect on the big names there. And as we saw with Lehman Brothers in 2008, it's going to be a great contributor. And once they basically Lehman Brothers, they had all this this capital in these I guess we'll call them subprime mortgage packages that they couldn't really liquidate for fair value, and that caused them to go under. And as a consequence, every kind of firm who had loaned them money, right, they can't get their capital back. So we're seeing a similar thing here where firms like Genesis, for example, or Alameda, that have their funds loaned out to FTX or stuck on FTX, they can't get it off, and that's what causes the contagion. And then furthermore, the mindset of the crowd takes over, and similar to a lot of bank runs, like in Cyprus, for example, in 2012, 2013, where everyone gets very fearful, everyone pulls their money out. That can actually make the problem a lot worse on its own, just the rumor. That's where the rumor can really just come in and destroy it without even necessarily like the background knowledge of it, right? So if everyone takes their money out, even if they're mostly solvent, if all the money leaves, they could be, insolvent. So
yeah, because some of those assets are just simply not liquid, and when you get a domino effect of people withdrawing, that creates liquidity problems for other companies that might have been perfectly fine up to that moment. So there are a lot of parallels there, and
similar,
I think.
So you go.
I was just going to say, with like a lot of the speculation around this is that FTX was basing their loans on collateral that had no value because they were using their tokens that they created out of thin air, their FTT tokens. And that in many ways is similar to the concept of subprime mortgages, because I know at the peak of that, you had anyone being able to get a mortgage, the old ninja loans where there was no income and no job, and they were still giving them a loan. This is kind of the same thing. So you can, the fallout of that was massive because lending on lending on lending, and the same situation here. So yeah.
Well, you're giving a loan based on a token that doesn't have any intrinsic value, unlike BNB or Kronos, for example, where there are actual utility to that token in that they have networks, right, that requires their use. FTX didn't have a network, for example. So there was not really that strong use case there in the first place. Also, I was going to add that I was thinking about this just then, but a lot of similarities to Bernie Madoff as well, with SBF being this kind of evil character, but also that during the GFC, everyone got scared and pulled their money from Madoff. So if people were a lot, more relaxed, then his scam might have kept continuing on. The Ponzi might have pushed on because everyone pulled out at once, didn't have that capital available. So a lot of similarities with Madoff, both in terms of the way the Ponzi worked, and then also the character as Sam Bankman-Fried is just, becoming the villain of the year at the moment.
Yep, sure. So how long do we expect this to last? Because if we're using some of these parallels that you've made to other situations of similar magnitude, it obviously, the dominoes keep falling, but at some point it stops. So is this something we expect to see over the next couple of months? Is it something that pushes well into next year? What's your sort of perspective on timelines for this?
Yeah, I've been doing some research into previous examples we've seen recently. Namely, we had the Luna collapse in early to mid-May. And then I was just trying to look at the fallout from that. So we had Celsius, which started in June, which is about a month later, and Three Arrows Capital, which was a month after that, which is a big hedge fund that went bust. So I think, it's going to be definitely a multi-month process where we're going to see maybe, for the next few weeks could be quiet, and then some other domino will fall, and that's going to cause, further and further. So I think it's going to be, definitely into next year. And then also with the economy the way it is at the moment too, it's going to make it harder to pull it out. So I think we're in for a long crypto winter where we're going to see these, these companies really default, and it's going to be, very sad to see. Another thing that I'll add with respect to the customer deposits that FTX they were using customer deposits, right? That's how they were making their money, was They were using customer deposits to trade, leverage trade.
Mhm.
But an important point we actually learned recently, this is a big development I probably should have mentioned at the start, was that the main reason they were buying out these failed companies like BlockFi, who were about to go bankrupt, and Voyager was another one, was because they wanted access to their customer deposits just to trade. So that was actually the whole reason why they were involved in buying out all these smaller, highly leveraged bankrupt firms, was they wanted their customer deposits to utilize.
So they're effectively buying, probably using leverage or probably using their own tokens, which will come out, I suppose. They were buying other firms purely for the capital because they needed the liquidity.
Yeah, exactly. It's, I imagine that's, highly illegal considering their terms and conditions. It explicitly states that they don't use customer funds, but that was the whole reason they were. And the reason we kind of know this now is because it was a term, allegedly it was a terms of the agreement to put those funds on the FTX platform. And while they want those funds on the FTX platform, well, it was to have control over them, obviously. Right.
So just before we wrap up, obviously we don't want to be adding further, wild speculation on what could be at risk and what could not be, because we don't know. We don't know where this contagion goes. But are there any other exchanges that you see that are sort of at risk at the moment that people need to really be aware of?
Well, I think the easy thing to say for this is, if a company is halted withdrawals, accept the fact that your money is 99% gone. So, BlockFi halted withdrawals like a few days ago, and they announced they're going to be filing for bankruptcy very soon. Right. So that's one. Genesis has halted withdrawals. So if you have your money locked up there, expect that most likely that's going to be gone. Similarly with Digital Surge as well, just based on the fact that given the history of what we've seen, it's extremely rare to see someone halt withdrawals of crypto and then suddenly get the capital to be able to pay it back.
Yep.
Another key one is Gemini Earn, which is connected to Genesis. They recently had a power outage and a bit of a technical issue earlier this morning amid concerns that they're connected to Genesis. So if you have your money in Gemini Earn, that's one to, not financial advice, but to very strongly consider pulling out because of the risk there being connected to Genesis, who recently halted withdrawals. So there's a few there to keep an eye on. And in general, I think during this time, it's going to be important for everyone to, ensure they have their crypto in the most safe custody, on a ledger, on cold wallets, make it offline, because, having it on an exchange at this time is extremely risky.
So, and you can go back and watch Josh's sort of discussion on that from the Monday insights, because there was a lot sort of discussed there about what we really can do sensibly to custody your assets in this environment, and really we should be doing all the time anyway.
Absolutely agree with that, 100%.
Yep. All right. Well, thank you very much for that. It's an ongoing and continuing developing story. So a lot we need to keep paying attention to, and it's really helpful to have you and Josh both paying attention to that and keeping us up to date. So we'll see what happens between now and next week. But for the moment, probably the advice, you can always say not financial advice, but it's probably, it can be sensible advice regardless, to look at where your crypto assets are at the moment. If you still have them on exchanges, you want to be quite confident that those exchanges are not caught up in this environment. If they are, look at secure options, look at storage that you can be more confident in. Yep. All right. Well, thanks for that, Branko, and we'll chat to you again next week.
Thanks for having me on. See you next time.
See ya.
Thank you, Branko, for joining us. And Chris, I'll see you on the next one. And for the audience, I want you to head over to the Discord channel. That's discord.gg/gold to continue the conversation. Chris and Branko will be there for the next 1 or 2 hours after the upload of this video. So head over there, ask your questions, get a response, and let us know your feedback. We really want to hear from you. I always want you to subscribe to the YouTube channel. That's youtube.com/Ainsley Bullion for the wide range of informational videos we put out 5 days a week, including specials and more. And while you're on the internet, head over to goldsilverstandard.com, because that's bringing gold and silver into the digital world. As we say here at the end, balance your wealth in an unbalanced world. Take care, and we'll see you next time.